The first thing is you have to make sure that you have checked your bylaws or operating agreements between the members and the entity, whether that allows you to add founders or not. If not, then you have to amend the operating agreement to make sure that you included all those things which you want to cover when you add a founder. You have to make sure that you have mentioned all the shares which you are going to offer to the new founder, and then you are recording all those things into a proper document. Then you have to make sure that you have a capitalization table, which we call cap table, that has to be updated how the share structure is going to be. For example, let's say you are offering somebody 5% as a co-founder. How that is going to change over years? It is going to be increased by 5% every year, or you are starting with, let's say, 50% or 40%, and how it will be diluted once you start taking more investments and things like that. So you have to make sure all those things are covered. Then you have to definitely find what are the tax implications, tax and legal implication on the new operating agreements. That you have to definitely discuss with your CPAs, lawyers, and others. And the last thing I would say, you should definitely file this new structure in the state where you have incorporated the organization, because every organization has a annual report compliance. You define everything, whatever has been changed over the years to the state. But let's say in this case, you are adding a founder from tomorrow. Then you have to definitely fill certain forms based upon the state to make sure that the state knows that these are the new owners of the company, and accordingly they will define every other aspect of tax and etc.